Welcome. In this episode, we will review several companies in the U.S. stock market, analyze recent results, and evaluate current valuations and growth expectations. Please note that the information presented here reflects analytical opinions and is for informational purposes only. It is not investment advice. You should always conduct your own research and make decisions based on your financial situation and future expectations. Datadog recently rose by about 14% following its earnings release. Revenue increased by 29%. Earnings per share came in at 0.59 compared to expectations of 0.55. And free cash flow reached $291 million while maintaining 31% margins. These are strong numbers. However, guidance showed that revenue growth is expected to slow to 19%. The reason the stock still moved higher is related to its AI-native customer segment. Investors were concerned that AI integration could hurt traditional software companies, but that did not happen here. On the contrary, Datadog leveraged OpenAI's B2B AI tools to generate income. The company also increased its high-value customer base to 603 customers, each contributing more than $1 million annually. Technically, even after the 14% rise, the previous peak is around $200, which suggests there could still be upside. However, growth is expected to decline in 2024. The P/E ratio is above 100, and in a bear market, high-valuation stocks are typically penalized. From a valuation perspective, that makes it difficult to classify as an attractive buy at these levels. Microsoft is trading at a P/E ratio of around 28, a valuation level it has not seen in years. For a large-cap company with double-digit earnings growth and continued expansion, this represents a more reasonable valuation compared to recent history. There are recurring concerns about potential challenges, but similar arguments have historically been made about most large-cap companies. Ultimately, earnings and growth trends are what drive performance, and Microsoft continues to deliver double-digit earnings growth. Palantir experienced a significant drop despite recently releasing strong results, after which the stock rose more than 10% in a single day. The recent decline did not appear fully justified based on fundamentals. When strong results are followed by volatility without a clear deterioration in business performance, it can create technical opportunities. Palo Alto Networks, operating in the cybersecurity sector, is technically positioned near attractive levels. Cybersecurity remains a structurally strong sector, and after notable pullbacks, certain names in the space could potentially deliver 30 to 40% gains in the medium term if sentiment improves. Western Digital operates in the data storage and data center hardware segment. As data demand and infrastructure needs continue to expand, storage remains a critical component of the technology ecosystem. Intuit's stock performance and returns compared to broad ETFs have been relatively weak. Profitability levels are lower compared to some large-cap alternatives, and with increasing AI competition in software and financial tools, questions remain about long-term competitive positioning. Webull is currently down around 50%. The company is expected to release results on February 28th. It may remain stagnant in 2024, raising the issue of opportunity cost. In markets where other sectors have corrected to strong support levels, capital could potentially be deployed in areas with stronger recovery prospects. Regarding Europe's transition initiatives towards a local payment network, the infrastructure currently lacks the scale and strength to compete with Visa and MasterCard. Even Amex Express has not managed to overtake Visa and MasterCard. A complete shift is unlikely in the near term, and the initiative appears more political in the short term than structurally transformative. Oracle faces uncertainty related to its debt levels. Additionally, if OpenAI encounters difficulties, Oracle could be indirectly affected due to exposure. Debt management will be a key factor to monitor. Pinterest has an attractive valuation, but growth in the U.S. market remains weak. That limits the scale of potential upside unless growth re-accelerates meaningfully. MicroStrategy remains heavily tied to Bitcoin's price movement. There is a possibility that Bitcoin has not yet reached its bottom, with potential downside scenarios towards 50K or even 38K. MicroStrategy also uses leverage, which increases risk. In volatile conditions, leverage can amplify downside even if Bitcoin eventually recovers. Meta, Visa, and Nvidia can be considered strong candidates for long-term portfolios due to their scale, profitability, and structural positioning. For investors seeking flexibility, fractional shares allow gradual exposure without requiring large capital allocations. DoorDash shows revenue growth and improving operational metrics, but net income remains under pressure and debt has increased. The stock trades at a P/E ratio of 94, which requires sustained high growth to justify. The partnership with OpenAI to enable grocery shopping via ChatGPT is strategically interesting, but valuation remains demanding relative to current profitability trends. To stay updated with the latest analysis and developments in the U.S. stock market, make sure to subscribe to the channel and follow upcoming episodes.